Okay, you should be able to see my screen now. Let's go ahead and get started. What we're going to do today is cover this solo 401k contribution mini course. This is a complimentary training so that you can really feel empowered to make contributions to your solo 401k plan. Before we get into this mini course, a quick disclaimer. While we want to make sure you are educated and empowered, this mini course training is not a replacement for tax or legal advice. While we can cover the broad strokes of contributions here, really getting down to the nitty-gritty of your specific numbers is a discussion for you and your tax professional. As a basic overview for contributions, this is a way to get money into your 401k plan. Contributions are some of the most exciting elements to a 401k, especially a solo 401k. There's an ability to put a lot of money away, tax deductible, or even tax free. And while contributions are really one of the most exciting elements of a solo 401k, they can also be some of the most confusing. There's a lot of ins and outs, a lot of specifics to your situation and your business. But the long and the short of it is, if your small business is making money and paying you, you can contribute some of that money into a solo 401k. Contributions can be pre-tax, that is tax deductible, or after tax, that is Roth. Without getting too complicated, there are two types of contributions in a solo 401k plan. The first type of contribution is employee salary deferrals. These can be up to 100% of your compensation, maxing out at $19,500 for 2021. Of course, if you're watching this video in 2025 or 2026, that number may be higher. The big takeaway here is that employee salary deferrals can be up to 100% of your compensation. You make 20 grand, you can put in 19.5. Remember, that's net. And employee salary deferral contributions can be pre-tax or Roth. Employer profit sharing contributions are the second type of contribution available in a solo 401k. They are 20 to 25% of your net profits, depending on your business structure. And employer profit sharing contributions are pre-tax only. There is no such thing as a Roth employer contribution. If you're talking about Roth 401k contributions, those are always going to be employee salary deferral contributions. The maximum you can put into a solo 401k is $57,000 per person per year for 2020, $58,000 per person per year for 2021. If you're age 50 or older, you have something called catch-up contributions. You can put in $63,500 if you are age 50 or older for 2020, $64,500 for 2021. As you can see, these are generous contribution limits. You can put a lot of money away into a solo 401k. Contributions are based on your net compensation. We were just chatting with one of our clients. She accidentally over-contributed to her 401k plan because she thought that contributions were based on gross income. They are not. They are based on net compensation. If you're a Schedule C, sole proprietor, independent contractor, single member LLC, then you're going to look on line 31 of your Schedule C to find that number. If you have an S-corp, a C-corp, these contributions, the net compensation is based on your W-2. If you have a multi-member LLC or partnership, you're going to look on your K-1, line 14. The big takeaway here is the more you earn, the more you pay in self-employment taxes. That sucks, but the more you are able to contribute. Contributions are based on net compensation. A frequently asked question we get, especially now, is what's the contribution deadline? When do I have to put this money in? What if I file an extension? According to IRS publication 560, the last date of the contribution for both employee and employer is the due date of the employer's return including extensions. So your contribution deadline is that you've got to deposit those funds before you file taxes for your business. If you have a corp, a multi-member LLC, or excuse me, if you have a multi-member LLC, then that's going to be, or an S-corp, that's going to be March 15th or September 15th if you filed an extension. If you have a sole proprietorship, single member LLC, C-corp, that's April 15th or October 15th if you filed an extension, and May 17th for this year because of the coronavirus extension. So your contribution deadline is you got to deposit those contributions before you file taxes for your small business. If you file an extension, you have extra time to make your contributions. This is IRS Publication 560 that I referenced in the previous slide. A solo 401k is considered a qualified plan, also known as a defined contribution plan. And you can see per IRS guidelines for both employee elective deferral and employer contribution right here, it says due date of the employer's return, including extensions. So that means that you have until you file taxes for your small business to make those contributions. Another question we get is it too late for me to make a contribution as an employee? I have an S-corp. Maybe, maybe not. We taught an entire webinar specifically on this topic with attorney and accountant John Heyer. He's fabulous. He discusses how to make these contributions compliantly. If you've already filed your W-2, you may need to amend that with your CPA or your payroll provider, but you can still make employee and employer contributions until you file taxes for your small business. Another common question we get is, how do I send Nabers Group my contribution funds? What are your wire instructions? Where am I supposed to send contributions? Remember that Nabers Group is not a bank. We are not a brokerage firm. We never touch your money. Part of what you do when you set up a solo 401k is you'll create a bank account or a brokerage account to hold your 401k funds. When you make a contribution, it's as easy as sending a wire from your business bank account or your personal bank account, if you're like a sole proprietor, and you literally just send those funds right into your solo 401k bank account. You never send any contributions or rollovers to Nabers Group. We do not handle your funds. Part of your plan setup is that you need to create that holding account, a place where you can deposit your 401k contributions and rollovers. The next question we get a lot is, how do I document my contributions? We've made this really easy for you. There's a contribution form on your solo 401k dashboard. If you log into your 401k, click on Forms, you'll see a drop-down menu and you can select Contribution Form. Then you'll fill out the contribution form appropriate to the type of contributions you are making. It's okay to use one form even if you're making multiple contributions. If you're making, let's say, employee pre-tax contributions and employer, you can put both of those on the same form. You might send two different wires, one for each contribution type, but you can put them on the same form. Always clearly document how much you're contributing and what bucket those contributions belong to. Remember, there's two types of contributions, employee, employer. Under employee, you also have different tax classifications, pre-tax, after-tax, Roth. Always be very clear in your records, in your forms, and maybe even sending distinct wires for each contribution type. That's going to make keeping track of your 401k plan records much, much easier. Where do I show contributions on my tax return? We have a whole blog post about this, about how to claim solo 401k contributions. They'll be in different places depending on your business structure. Personal, that is employee salary deferral contributions, are usually going to be on Schedule 1 of your 1040. If you've got an S-corp, for example, there's a line to document contributions for profit sharing plans. Same with your 1120 for a C-corp. This blog post will walk you through how to claim those contributions on your tax return. But again, going back to our disclaimer at the beginning, while we can show you the mechanics, it's really up to you and your CPA to ensure that you're doing this correctly. You want to claim those contributions correctly, especially if it's going to be a tax deduction. Always work closely with your CPA to ensure that you are properly documenting contributions on your tax return. Another question we get really frequently is, if I contribute to a regular full-time job, 401k, can I still contribute to the solo 401k? And if so, how much? Yes, you can. The IRS allows you to contribute to multiple 401k plans at the same time. You can pay into a workplace 401k and your solo 401k in the same year. We'd recommend that you start with our contribution calculator at solo401k.com/calculator to see what your numbers are. If you max out your 401k employee contributions at work, you must deduct that amount from the employee contributions to your solo 401k plan. Employee contributions are an aggregate of all your employee contributions everywhere. This is a page from the IRS website that discusses the solo 401k, and you can see around that box at the bottom, a business owner who is also employed by a second company and participating in its 401k plan should bear in mind that his limits on elective deferrals, that's employee contributions, are by person, not by plan. He must consider the limit for all elective deferrals he makes during a year. So if you're maxing out your contributions as an employee in 401k number 1, then you would not be able to max out the employee bucket in the solo 401k. And we've got an example here we'll walk through. So Manisha works as a software developer for a blockchain startup. She also has a private IT consulting firm, an S-corp, for her solo 401k plan. Manisha puts in $15,000 to her 401k at work each year as an employee. That's her elective deferral. She also earns about $150,000 in her IT firm and pays herself $100,000 in W-2 wages from her own S-corp. So we know Manisha is putting in 15 grand to her 401k at work, and she's also earning about $100,000 in W-2 wages from her S-corp that's connected to her solo 401k. Because Manisha has put $15,000 towards her workplace 401k as an employee, she only has $4,500 left in employee contributions to her solo 401k. $15,000 plus $4,500, that's $19,500, the ceiling for employee contributions. Additionally, remember Manisha has $100,000 in W-2 earnings from her S-corp. So let's see how much Manisha can put into her solo 401k. We take 25% of her W-2 earnings, that's the employer profit sharing contribution to the solo 401k, that's $25,000. Then Manisha has $4,500 in remaining employee salary deferral contributions. Remember, that's what's left over in the employee bucket after Manisha put 15 grand towards her workplace 401k. So Manisha has a total of $29,500 in contributions to her solo 401k plan. 25,000 of the 100 grand, that's 25%, that's her employer profit sharing contribution. And then 4,500 is her salary deferral elective contributions as an employee. We'd also recommend, of course, that you're working closely with our 401k calculator. It's a great place to start. That's solo401k.com/calculator. Another question, this is similar to the one previously is, do I send my contribution funds to Nabers Group is where does the money go? How do I actually contribute funds? So remember from previously, when you're setting up your solo 401k, the documents are step one. The documents we prepare for you, that's step one. The next step is you need to have a place to put your money. We have plenty of trainings and guides that walk you through opening a solo 401k bank account, solo 401k brokerage account. That's where you can deposit your rollover funds and your contributions. Once you determine your contribution amount with your CPA, you can literally just send a wire from your 401k, from your business bank account to your 401k bank account. You are in charge of where you hold your 401k funds. You decide if those contributions goes into a bank account or a brokerage account connected to your 401k. When you're opening the solo 401k bank account, it's in the name of your 401k trust, and it uses your 401k trust tax ID number that our team obtained for you. Same with the brokerage account. If we're looking at a funds flow, you've got on the left-hand side of the page these previous retirement plans. You can see that money's already rolled in and been deposited in your 401k bank account. When your business makes money, you can contribute some of those earnings to the solo 401k. Everything lands in that 401k bank or brokerage account as the first step. And then from there, you can start investing by sending wires from your 401k bank account out to various investments. But it all starts with funds coming first into your 401k bank or brokerage account. Okay, that concludes our mini course on contributions. I hope that you have found this helpful. If you have any questions, please reach out to us at solo401k.com and we will be here to help.